Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market. Today the 25th of February, Friday. So I think that it's no sense to change the currency for today, and also Aussie dollar has nice development, interesting with the large of nuances development of the price action in the intraday charts. So I think that we today's analysis will dedicate to this pair, but I know that you are missing of our Euro USD analysis, so I think that we will dedicate the next week to the euro currency. So let's proceed with the Australian dollar. This is the daily time frame. As you can see, market continued to stand in this range besides the weekly pivot points, monthly pivot points. This monthly pivot point around 99.32 and monthly pivot resistance 1.0127. Okay, so market stands for the whole month in this area. In general, this is the bullish range because market holds above the monthly pivot point, so this is moderately bullish sign. At the same time, as you remember, our suggestion was do not marry any position, because you can see how sloppy price action during the almost the whole February. So you can see some thrust to the downside, 3 days to the upside, one sell-off, then again 3 days to the upside. So this price action assumes that we should concentrate our attention on the intraday charts, because on the daily time frame you do not see any long-term direction, no long-term trend that you can enter. So this is a really choppy and sloppy price action on the daily time frame. So we do not see anything like this. Okay, so this is really nice move to the upside. Now on the daily time frame, we can see still that the butterfly is still forming. Butterfly sell with the target around 10222. It's right here, 127 expansion. I think that this should be 127 butterfly, because the retracement from this up leg is very deep. So it's about 88 Fibonacci support from this swing to the upside. So deep retracement, hard sell off. So I think that if this butterfly will reach the target, it should be 127 rather than 11618. Also take a look at this larger ABC bottom. 618 target is just above the market, also very close to the target of the butterfly. So I think that this is nearest target on the daily time frame. At the same time, you can see that market almost totally negate the hard sell-off that has come on Monday due to escalation of the conflict. So this is also the bullish sign. Well, usually when the hard sell-off bars couldn't hold at a 50% resistance, then the recent price action in the market totally negates it. So it tells us that possibly market is stronger than it seems on the first view, and this is also the bullish sign. Maybe this comes in row with our weekly analysis that suggests some blast to the upside on the market, and has the bullish bias, the weekly analysis. So maybe we will see it on the next week. Currently see the trend is bearish. This is unconfirmed bullish trend. Market has shifted to the bullish side, but this bar hasn't been closed yet. This is current bar, so our confirmed trend is bearish. Anyway, I think that our attention is, again as I said, should be focused on the intraday charts. There are a couple of possibilities for trading in the scalp trade. I think that's also not the time to hold any position, buy or hold or sell and hold. I think we should enter in some context and take profit quickly, because this is really not impressive price action currently. It just stands in the same range, although it's above the monthly pivot point. Now let's take a look at the 4-hour chart. What do we see here? First of all, market has hit 1618 target from this ABC bottom pattern. Okay, also as you can see later, this is 127 expansion from this A, B, C pattern. It's very close to the monthly pivot resistance. Now, what we can suggest? This not impressive, but still this is the thrust to the upside, although it's not so perfect like this one, but it still could be treated as the thrust. For example, so let's take a look. 1 2 3 4 5 6 7 8 9 bars to the upside. Okay, no close below the 3x3. It's nice. So I think that this could be a possible context for the bread and butter buy trade. How it looks like. Here you can see the bread and butter sell trade. When the market shows thrust to the downside, makes the retracement to the some solid fib resistance area. This was the 3.8 resistance from the whole swing to the downside, and then shows the returning back of this swing. Okay, so our task now, how we should trade this, is to enter on this retracement with the hope that market show this move to the downside. This usually happens because when the market reverses to the opposite direction, it very often shows the double W bottom or W top patterns. Okay, it's very seldom reverse as V bottom, for example, hit support and moves to the upside. So this is the bread and butter trade, as John Napoli calls it. So here we can see something like that. Market will hit some support, for example 10052, this 3.8 support from this whole swing to the upside, and then will show 618 retracement from the whole swing to the downside. So we should enter somewhere around this area. Okay, later I will tell you why this support is more significant than this support. On the hourly chart you see another details of this possible trade. So this is the context for the 4-hour trade, 4-hour chart trade. Wait for retracement to this support, and possibly you can buy with the stops below this area. It's about the 40 pips, not big stop loss. When the market starts to move higher, move stop to the break even, and wait when the market will hit 618 resistance from the whole swing to the downside. Also, if you are bullish, you can hold the position a bit longer. Just be sure that you will not risk much. If market will accelerate to the upside in the anticipation of the possible reaching target of the daily butterfly, so this also could be done. But the high probability trade is the target, is the 618 resistance from the possible swing to the downside. This swing could happen because market has hit strong area of resistance. Now let's take a look at the hourly chart. What else could we trade now on the Aussie dollar? This is hourly chart. Here you can see the 618 target, ABC. From this ABC, market has hit 127 expansion. Also you can see that 3-drive sell pattern is forming currently. First drive retracement, second drive is precisely 127 expansion from the first drive. Okay, and the third drive is right here, is cancellation of the 127 expansion from the second drive, and 1618 expansions right here of the first drive. This is almost perfect 3-drive sell. Also it looks like very often as the bearish wedge. Okay, this is another pattern, and another reason why I think that possibly market can show some retracement to the downside. On the very short term perspective, if you are trading on the hourly charts, you possibly even could enter on the short side, but be sure that hourly trend will shift to the bearish. This is a MACD predictor, or you can use just simple MACD indicator. Be sure that trend shift to the bearish. After that you can enter on the shallow retracement using, for example, 15-minute chart or 5-minute charts to possess yourself with a short on the short side of the market. The minimum target of the 3-drive sell pattern is the low right here between the third and second drive. So market should take out these lows. Will be your target. Also, as you can see that this lows is very close to the area of support that we intend to use for the possible enter on the long side on the 4-hour chart. So I think that I'm not confused you. So how it could work down. For example, market shift trend to the bearish, you use 50-minute chart or 5-minute chart to enter on the short side with a very tight stop, for example, just above these highs. Okay, when the market will hit this area, it has accomplished the target of the 3-drive sell. If market will show some signs of strength right here, for example some reversal patterns on the 15-minute charts, you can enter on the long side in the bread and butter buy or 4-hour trend or 4-hour time frame. Okay, so you can buy here with the target 618 retracement. Okay, this is a bit complicated, but This is how it works in general. Or you can hold your position for the anticipating of the reaching 127 expansion of the butterfly, a sell pattern on the daily time frame. Just keep your risk reasonable and move your stops to the break-even when the market starts to accelerate to the upside, just to not lose much. Okay? That's been said, a couple of possibilities for trading on the very short-term perspective. You can trade on the hourly chart free drive sell pattern. Just be sure that trend will shift to the bearish. Do not enter if market will accelerate to the upside. Okay? It can show some wash and rinse right here, some move to the upside to reaching the monthly pivot resistance 1 again. Wait when the MACD turns to the bearish sign. Only after that you can try to enter on the short side with the stops above the highs, with the retracement on the shallow retracement on the lower time frames. Okay, your target will be 3/8 support from the whole swing to the upside. This is also the low between the third and second drive. Then possibly, if market will show some signs of strength here on the 30-minute charts, on the 15-minute charts, some reversal patterns, you can try to enter on the bread and butter buy in this area. The target of this trade will be at least 618 resistance from the whole swing to the downside. This is two contexts for the possible trading for today. Again, I recommend you do not hold any position too long. Take your profit fast.